Hello, and welcome to Agendi's webinar today on navigating UK sustainability reporting. Today, we are bringing you the first part of our series. It's a comprehensive guide to current and emerging standards. I'm Helena, I'm one of Agendi's managing partners, and I'll be guiding you through the intricacies of UK sustainability reporting today. We are going to cover everything from current reporting requirements to preparing your organisation for future disclosures. And along the way, we'll be sprinkling plenty of practical insights. The goal of this webinar is, of course, to look at progressing disclosures. So hopefully we've pitched it, but if there's any follow-up questions or if we've kind of assumed a base level of knowledge that was maybe a little bit beyond, we're more than happy to answer any of those questions along the way. I'm also joined by my fabulous colleague, Victoria, who you'll hear from later on, in particular, a deep dive of all of those current, expected, and potential longer term requirements that we may expect coming out of the UK. First up, before we begin, a quick introduction to Agendi. We are a specialist sustainability consulting firm. We have operations across the US, Canada, Europe, and of course, here in the UK with our topic focusing very narrowly on UK mandatory sustainability disclosures. Within Agendi, we support organisations of all sizes, all sectors, with a focus on large, listed global organisations. And we deliver solutions across the full range of sustainability strategy development, execution of that strategy. And then, of course, as I said, the focus topic for today, bundling all of that up in reporting and disclosure. So throughout this webinar, in particular, when we get to the section on defining a disclosure roadmap, we'll be touching on key implementation areas that align with Agendi's service offering. So that's, of course, looking at governance and capacity building, quantification of your baseline and your annual sustainability metrics, conducting an ESG materiality assessment and making sure that aligns across the global regulatory framework that your organisation comes under. And then, of course, looking at all of the regulations that you come under and conducting a gap analysis and maturity assessment to understand what are the required work streams, what are those complementary activities, the feed-in activities, the policies, the plans, the metrics that you need to have in place in order to meet those regulations. One area that we're going to be touching on across the webinar is, of course, the concept that those requirements are evolving. And so how do you plan as an organisation now to progress your mandatory disclosures, preparing for what's to come in the future? As I said, this is part of a 3-part series. So if you're not signed up for the other 2 parts, please do join along. We'd be glad to have you. Next week on October 8th, we're going to do a deep dive on climate-related financial disclosures. We're also joined by the SUS Global team. They're going to bring forward a short presentation on how their product can help you assess climate exposure and also quantify those climate-related impacts. And then finally, in the 3rd part of our series, we're going to explore transition planning in depth. We have a guest speaker there as well, Fabrizio from Impactivise, who is going to share insights on how to align your financial instruments with your transition plan. We'll pop the link to those other series in the follow-up, but let's move on and focus on today's comprehensive overview. As I said earlier, the goal of this webinar is to support sustainability managers and associated teams with both preparing and enhancing those existing disclosures. We're going to start with a very quick flash on the overarching sustainability goals set by the UK government, as well as drivers for those corporate disclosures. Then we're going to move on to the current, expected, and future sustainability requirements, specifically in the UK, but of course looking at how they interact with the global landscape. Then we're going to walk you through the key steps on building a sustainability disclosure roadmap, and then we'll finish with a checklist to ensure that you leave this webinar with some practical steps on how to implement that disclosure roadmap. You may have noticed we've got the Q&A box up and running, so do log any questions. We hope to leave plenty of time to get to them at the end. And it looks like it's already started recording. We will be recording this session and we'll share all of the slides in our follow-up. So brilliant. Let's get started. So the UK sustainability required disclosures, they're designed to support a series of overarching commitments, policies, and publications addressing key ESG topics. The most significant commitment is UK's legally binding emission reduction target that's wrapped up in the Climate Change Act and supporting our global climate goals, the Paris Agreement. So we have legislated here within the UK that an emission reduction goal of 80% reduction by 2050 from 1990 levels. And then, of course, to monitor the progress towards this target and provide external advice, we also have the UK established Committee on Climate Change as an independent advisory body that helps to shape that policy and report on progress. And of course, when we look beyond climate change, the UK has also made significant commitments to social and ethical issues such as the Equality Act, the Modern Slavery Act, and of course, all of these areas address those important aspects of the social sustainability and ensuring that companies operating within the UK are adhering to fair labour practices and promoting equality. Later on in the webinar, Victoria is going to run through some of those key disclosures. And then, of course, supporting all of those overarching commitments and acts, we have key publications along the way. Of course, it's many more than what we have listed here, but some of the key publications and strategies that supporting these overarching commitments include the UK's Green Finance Strategy, the UK's Net Zero Strategy, and the UK Corporate Governance Code, which Victoria will go through in just a moment. So as I said, to support these overarching UK commitments, there is a resultant compliance disclosure placed on UK companies. So outside of this key driver of compliance, there are also a number of benefits and drivers of progressing on corporate disclosures. Of course, the number one we see there outside of compliance is risk management. So mitigating those environmental risks, both on the physical side, but also those risks posed as part of the transition to a low carbon economy. And of course, when we have risks, there's also immense climate related opportunities. And as we go on through the webinar, we'll explore the disclosure mechanisms on how companies can report on their progress and alignment towards the low carbon economy. Of course, investor transparency and those demands, making sure that there is consistent, reliable information for informed decision making is also a key driver of corporate disclosures. Meeting customer requirements, we see that a lot of pressure coming via key customers requiring particular progress in certain areas, disclosure to meet their own climate related or sustainability targets. And of course, as we go through the webinar, we come on to some of those more extensive sustainability schemes, such as the EU Corporate Sustainability Reporting Directive. We'll see how that pressure comes forward in reality. And then, of course, not forgetting all of the wider stakeholder transparency. So looking at wider employees, affected stakeholders, and again, the same sort of premise of promoting informed decision making across these stakeholder groups and building trust. So throughout the webinar, we're going to be hopefully exploring and addressing some of these key challenges that organizations are facing in relation to sustainability disclosures. These are certainly not challenges that are unique to UK companies. This, of course, extends across all of the jurisdictions where we see that rolling momentum of increased requirements of sustainability disclosure. So key areas that we're going to be touching on, of course, is the role of data and how can you ensure that there's effective data governance, that data is available, that it's of a particular quality. We need to move towards this one source of truth to make sure that all of these disclosures are consistent and aligned. Which brings me on to my next one, which of course there's global framework variability with small variable aspects in terms of the mandatory disclosures in particular areas. It can be really challenging for an organization to understand what they need to disclose and where and how and what those nuances are in between the global framework variances. And then, of course, we have different approaches to materiality, which we'll come to as we go. And all of this is in an evolving requirements. Things are changing. We know that it's not static. We have major changes coming up within the UK in terms of sustainability requirements. How do you ensure that your internal team are remaining up to date, that the competency is there, and of course that the resources are available? So hopefully we'll be touching on all of these throughout the webinar and then wrapping up at the end. I'm going to hand over to my colleague Victoria now, who is going to run through some of the key sustainability requirements that are in place, expected, and potential future. As I said, if anything is unclear, please do pop a Q&A in the chat, and we're happy to address those potentially as we go.
Perfect. Thank you, Helena. Hello also from my side. I'm providing you an overview now of the mandatory or mostly mandatory regulation already in place, expected in the near-term future, and potentially there in the mid to longer-term future. So when we look on the left-hand side, and I will go into more detail in the following slides, we have the SECA reporting, streamlined energy and carbon reporting, which requires disclosure of energy use, carbon emissions, energy efficiency measures, and carbon intensity in the annual reports. We have the climate-related financial disclosure, which mainly follows the TCFD framework, where larger companies have to report their climate-related risks and opportunities. We have the UK corporate governance codes, which I'm going into more detail later on as well. We have ESOS, the Energy Savings Opportunity Scheme, also for larger UK businesses to not, when you compare to SECA, it's not about the carbon emissions, it's about the energy usage in your UK locations and how you can reduce your energy consumption. We also will talk about mandatory requirements on the social side. So we have, for example, here listed the Modern Slavery Act in the gender pay gap reporting requirements, and also some more financial focused disclosure requirements, like for example, the requirements for sustainability disclosure and labeling regime from the FRC. So all more in detail in the coming slides. We then later on also do a deep dive into the expected upcoming regulation, ISSB on the top of mind here, as expected in the beginning of 2025 in Q1 to have the UK endorsement of the ISSB to then form the sustainability disclosure requirements in the UK. The TPT, the Transition Plan Task Force, will be integrated within the ISSB most likely. So that is also a framework that is already known that will become mandatory. And we will have more information or the finalized information beginning of next year. Something we have to watch as well as UK businesses is the EU CSRD regulation, because it's for all companies that are already also doing business in the EU. There are specific thresholds. We had a webinar about that earlier this year, where we went into a lot of more detail for CSRD and how to prepare for this disclosure. What is important just to note from this webinar, also important for UK businesses or for global businesses that have that conduct business in the EU. We listed also potential future regulation here. We don't do necessarily a deeper dive into those because we see them as further in the future. There's nothing confirmed yet, but wanted to highlight what is out there and could potentially become mandatory further down the line. So just to mention here, the TNFD, for example, the framework is out there. It's not mandatory yet. We see, of course, the first movers already publishing TNFD reports and conducting analysis. We have relatively new, the TISFD, the Task Force on Inequality and Social-Related Financial Disclosure. We have, when we look at ISSB, we do a deeper dive later on today, and you will see that ISSB at the moment has two standards out there, the IFRS S1 and the IFRS S2, which are expected to, well, there are more disclosure standards expected for ISSB, including like sector-specific disclosure. Another question is what happens with for SMEs. Will, for example, the requirement for climate-related financial disclosure capture smaller businesses down the line? What happens with assurance expectations? What we can witness in the EU with CSRD at the moment is that they have increasing assurance requirements for sustainability statements, going from limited assurance to reasonable assurance over a number of years. So it would be expected, reasonably expected in the medium to long-term future to have increased assurance requirements in the UK as well. With that being said, let me move on to a deep dive now on from the left-hand side, basically. So what do we have? What is already in place in the UK? So when you look here on the left-hand side, you see the names that are already mentioned before. We have 3 slides on those. So those are the environmental regulations that we are talking about. So you see here on top the climate-related financial disclosure implemented since 2022, which has the goal to support investment decision towards low-carbon economy. That was stated as the official goal to include or incorporate this regulation. We listed also, of course, this column here, who needs to report, is a slight simplification of which companies need to report. So for the climate-related financial disclosure here, also always depends if your company is listed or if your company is private. If your company is listed, you only have the requirement over the 500 employees. If your company is private, it's in general 500 employees and over 500 million in turnover. Unless you're a banking LLP, for example, then it's only the employees. So there are still some like slight specifications depending on what type of company you are. When we look at the second one, the SECA reporting here, the streamlined energy and carbon reporting, the goal of this is to have awareness of energy costs and encourage energy efficiency measures and, of course, transparency, so that companies disclose their emissions year over year in their annual report. Depends again here if you're listed or large unlisted companies. All listed companies have to report. If you are unlisted, then you have to fulfill 2 out of those 3 requirements that are listed here. Depending on your status again, you have to disclose either your global figures, which are for listed companies, or your UK figures, which are for large companies and LLPs. ESOS here, the Energy Savings Opportunity Scheme, also there to encourage energy efficiency measures where you really report on the energy consumption and on a whole assessment of your UK locations is required to understand how you could save energy as a business. There have been different phases of ESOS. We are now coming to the finish line of phase number 3. Phase number 4 then follows in 3 years. So you have to report this assessment and also an action plan, how you plan to reduce your energy. And one thing I think this slide also makes clear why it is complicated to have an overview. What regulations apply to your business is because those thresholds are different for every regulation you look at. When we look at the last one here, a bit more focused on financial services. So when we look at the sustainability, disclosure, and labeling regime, so this is to improve trust and transparency of sustainable investment products and also to prevent greenwashing. What is required here for all FCA authorized companies is or are the naming and marketing rules, so how you are allowed to name your investment products. Then depending on your assets under management, here you have to either disclose later on an entity level, or if you're larger, ongoingly on a product level as well. So that has been the overview for the environmental regulations. I'm now moving forward to the social regulations. Just two we want to highlight here. Just one note, of course, this is a non-exhaustive list in general, but we wanted to highlight the ones that we see as the most applicable and don't want to say most important, but most applicable and most relevant for the companies we work with and we come across. So when we look at the social one, there's the Modern Slavery Act from 2015, of course, that is fighting against modern slavery. Companies have to access and also disclose the steps they take to prevent modern slavery in their own business, but also in their supply chain. The requirements a bit simpler here, turnover over 36 million. And when we look at the Equality Act from 2010, the Equality Act states that women and men need to be paid the same for the same work. And then later on followed the specific gender pay gap reporting, where UK companies that have over 250 employees have to report the pay, well, like the name says, the pay gap between men and women. Coming to the governance regulations, now we want to highlight those three that you can see here. The UK Corporate Governance Code focuses on improving transparency, trust, and accountability in corporate structures. This regulation applies to listed company and includes provision for board leadership, internal controls, and risk management, and more. So just a brief overview of what is required under the UK Corporate Governance Code. There has been an update in 2024. There existed, of course, a corporate governance before that, but it was just recently updated. When we look at the second one here, diversity and inclusion on company boards and executive management, this is a requirement for listed companies as well, where you have to set specific targets on the representation of women and ethnic minorities on your board, and have to report the progress on the targets. You see them listed here on the right-hand side as well. So for example, over 40% of the board should be women. What we wanted to highlight here as well is the UK Stewardship Code from 2020. It's not strictly mandatory, it's a voluntary code. However, it is underpinned by a broader regulatory framework for stewardship in the UK. And in particular, the FCA requires asset managers and insurers to state whether they comply with the code, and if not, set out an alternative investment strategy. So it's kind of voluntary, but you have to explain if you not follow it, which is why we wanted to list it here as well. Slightly different principles depending on if you're an asset owner or a service provider. Okay, so that was the overview of the mandatory or mostly mandatory regulations. Now, we also wanted to talk briefly about voluntary disclosure. And the main reason why we wanted to do this is, of course, because voluntary disclosure can set you up and prepare you for mandatory disclosure. That's why we highlighted here how the different frameworks are aligned to the mandatory disclosure frameworks, so that you can see, for example, CDP, they of course update their disclosure platform every year and align with more and more frameworks that are out there. So you can see for several years already it's aligned with the TCFD framework since for a brief period of time also with TNFD, but now they also more and more align with the ISSB, so the IFRS standards for sustainability, and also with CSRD. Don't want to go into too much detail here, but one more to point out, GRI, for example, also helps businesses to understand and communicate their impacts on a variance of different topics, so climate change, but also, for example, human rights, corruption, a lot more topics. It's a good preparation, for example, also for materiality assessment, at least a good starting point. So can help you to prepare for several different mandatory disclosure frameworks as well. Moving on to what is already in place, to what is expected. So the slide you saw before, moving on to the middle of it, basically we have a few more highlights on especially ISSB. So on the timeline here, you can see that the UK government has outlined clearly this timeline for implementing the sustainability disclosure requirements. The endorsement decision for the ISSB standards is expected, as I said, in Q1 2025, followed by consultations on how transition plans will be disclosed by companies. Listed companies will be among the first to adopt this requirement, with then wider consultation on companies outside of the FCA's regulatory perimeter. So definitely will be an exciting beginning of the year next year to clearly see what is being implemented, how it's being implemented, what companies come first. But as you can see from the previous or from the current mandatory disclosure, listed companies and large other companies, however large will be defined, we will see, but will be required most likely to report. Brief overview about ISSB. So the International Sustainability Standards Board, that's what ISSB stands for, was formed in response to the growing demand for global consistency in sustainability reporting, was established in October 2021 as a joint initiative of the Financial Stability Board and the International Accounting Standards Board. And the ISSB aims to develop and deliver comprehensive global applicable sustainability disclosure standards that will provide investors and wider stakeholders with the information they need to assess the sustainability-related impacts, risks, and opportunities of companies. Because as you could see before in this overview of what is already in place, and that's kind of only the UK, of course, when we look globally, you see more and more different standards. And while there is interoperability between different standards, is still quite a lot to consider, to put it simple, and not necessarily easy to understand what you have to report to, how it works together, if everything is repeated, how it overlaps. So definitely ISSB could bring us a step forward into global convergence here. And that's something we see also on this slide, that you can see it's being adopted, or so far announced, being adopted by more than 20 jurisdictions worldwide. And they cover around 55% of the global GDP, 40% of the global market capitalization, more than 50% of the global greenhouse gas emissions. And we put a few example countries here on the right-hand side. So you see there's a wide global adoption. I think one thing I would like to mention here, of course, there's one big country missing. So you see that the United States are not on the list. Depending on how you follow the sustainability regulation in the US, just want to mention quickly, it's divided. There have been proposed rules from the SEC. They're undergoing lawsuits at the moment. There are more regulations on a state level, for example, California regulation. So it's a place to watch, and they definitely did not announce to adopt the ISSB standards. However, you can see how many other countries announced to adopt them or are already in the process, so that even without the US, 55% of the global GDP would be covered if all of the countries adopt the standards. Quick one slide on CSRD, so that's the EU's Corporate Sustainability Reporting Directive that is considered complementary to ISSB. As mentioned before, of course, often a question mark, why should non-EU companies be concerned about CSRD? Because depending on your size of business you conduct in the EU, you might fall under CSRD. One thing I want to highlight here is that CSRD requires a double materiality, which is a materiality assessment looking from the impact perspective. So what impact does your company have on society and environment? In the financial perspective, so what risk and opportunities does your company have? That's why it's called double materiality assessment. This is a big difference compared to previous standards and also to, for example, ISSB, which consider only the financial materiality. Okay. Quick highlight of our upcoming webinars. So we have the deep dive into climate-related financial disclosure. So where we see, well, how to report, of course, to the climate-related financial disclosure, but then also how we see it being developed or how it's going to develop, considering that ISSB is building on the TCFD requirements. As Helena mentioned in the beginning, we have or we collaborate with a different company here, with an additional company, SAS Global. They provide data for especially the physical risk assessment for companies. So that webinar is happening in 1 week. And then we have also one happening later on in October, where we do a deeper dive into the transition plan task force framework that will also most likely be integrated into the ISSB standards in the UK. We also have here included a third-party speaker, Impact Device, where we bring in the financial perspective, how you can finance the transition. Just one brief note, what companies develop normally or often a transition plan when they have set a net zero goal. The transition plan outlines how they will reach or plan to reach net zero. And of course, there are financial considerations included in those plans. And now I hand it back to Helena to go into a roadmap on how to implement the disclosure within your company.
Brilliant. Thank you so much, Victoria. So what we have here outlined are 6 simplistic steps on defining a disclosure implementation roadmap. So the first key step that we see is know your material issues. So understanding what are the material issues for your organization, ideally thinking about that from a longer term perspective. Step 2, of course, is to identify your ambition level and assess your current state. So thinking about where you sit in terms of all of your disclosures and benchmarking against your peers and leaders within your sector. Now, that piece is quite important because, of course, with a lot of these disclosure requirements, there are some that are phased in or a comply or explain basis. So there is a small amount of optionality of how you address those items and which items you progress in the short term, as opposed to building out and developing that over time. The third step, and I'll run through all of these individually in more depth in a moment, of course, is identify what are the relevant regulations and thinking about that on a global level. Within Agendi, we support a large number of clients who come under many of the different regulations based on their operations. So we have one client in particular that's come under EU, CSRD, ISSB within the countries of operation, also the Californian rules. And so what's really important is that you take all of those regulations that your organization is going to be exposed to or may potentially be exposed to over time. And that part's important because some of those thresholds, of course, we need to enable and think about company growth as potentially you may come into scope over time. So take all of those regulations, break them down and understand where are you at now, where do you need to progress and what that looks like in terms of the short, medium and long term. And so of course that leads on to step 4, which is undertaking that comprehensive gap analysis assessment. So breaking all of those disclosure requirements down and understanding what is your readiness in relation to each of those granular disclosure items. And of course, that's thinking about not just one field of readiness, but thinking about, are you tracking the data? Do you have the actions in place? What is your current disclosure? Where is that sitting? And making sure that you can build that accurate picture of everything aligned. And that's definitely one of the challenges that we see with our clients, is making sure that all of their public disclosures are linking to the same metrics and the same information. Of course, once you build out that gap analysis, you can define your disclosure roadmap. So understanding which of those items you're going to progress in the short, medium, long term. And then thrown on there, number 6 is looking at technology. And then, as I said earlier, this is evolving. All of these areas, we're expecting changes to these regulations as they are enhanced over time. So it's all about monitoring and adapting the process. I'll now step through, I will now step through each of these. As I said, step 1 is know your material issues. And this can be a really challenging area for some organizations when they, of course, come under many different jurisdictions with varying approaches to what is material information. Historically, undertaking an ESG materiality exercise was seen as a slightly more fuzzy, qualitative approach. And of course, with the introduction of the EU CSRD, that's very quickly moved away from more of a fuzzy approach to a data-driven approach. And of course, that the same can apply when we think about ISSB. The definition that ISSB, so the incoming regulations within Australia, within the UK, once they are endorsed, defines material information as information that if it is omitted or obscured or misstated, it could reasonably be expected to influence investor decisions. So it's really taking a financial approach. Now, some of the confusion that we have across all of our clients coming to us is, should they be looking at a single materiality, financial materiality focus, or a double materiality focus? There is a lot of movement to suggest that if you take that time horizon out far enough, your single materiality assessment can incorporate all of those impact-driven topics if you're looking further enough into the future. So some of those examples are looking at human rights, in the future leading to reputational, regulatory risks, biodiversity impacts or dependencies, I should say there, the water scarcity, community development, essentially the social license to operate. And so although ISSB follows this single financial materiality approach, if we are looking at this from a longer term time horizons, and that would be one of the key recommendations I would give to you if you are doing an ESG materiality assessment, is you're not just looking within the current time frame, but you're looking at in the short and the long term, then of course we are going to be drawing in those impact-driven topics. So moving on to identifying the ambition level and assessing your current state. And as I said here, thinking about both your own company and peers and leaders within your sector. One of the key areas that we're looking at is, of course, understanding where your organization desires to sit in relation to this maturity ladder. Of course, the baseline is minimal compliance, but in terms of progressing and advancing in terms of those incoming disclosures, there's certainly a wide range of how that can be implemented within an organization. We have a lot of clients that come to us. They like to prepare everything in-house, undertake all of those analysis, get their data policies ready to disclose on a public basis once it is mandatory. And then we support many other clients who are progressing their disclosures in the public realm in terms of CDP or the UN Global Compact. But one of the key areas that we see in terms of progressing that maturity is the strategic integration. And of course, we know now that sustainability can't just sit within its own team. It can't be siloed. We need cross-functional teams to consider the longer term aspects of climate sustainability. So especially when we start thinking about climate related financial disclosures, that certainly doesn't just sit within the sustainability team. We're looking within the risk team, the finance teams, depending on the type of organization we would expect to involve HR teams, and broadening that outside across the business. The same goes when we go on to defining a transition plan, making sure that we have that longer term roadmap of how that particular organization is going to address and move through towards a low carbon economy. So thinking about all of those longer term risks and opportunities and integrating that into decision making. And of course, we see the highest level of ambition is preparing now on a voluntary basis and future proofing. So that's proactively preparing against what we know are highly likely regulatory changes here within the UK. So that's looking at ISSB, which of course will encompass the transition plan task force, but also thinking about the role of nature in terms of your organization. What are your impacts, dependencies in relation to nature, and how are you supporting our global biodiversity goals? And then a new one tucked down there on the bottom is the task force of inequality, financial disclosures, recently merged together, and we're expecting to see a more socially driven disclosures, thinking about all of the areas in our social license to operate of an organization. So moving on, as I said before, identifying the relevant regulations. Victoria gave us a great coverage of all of the potential regulations, but of course that is evolving on a global space very, very quickly. Keeping up to date can be challenging, but thankfully what we are seeing is a convergence towards international standards, which will hopefully break down some of the misalignment and the confusion. Of course, there's always going to be complexities on how they are adopted at a country level. So making sure that local teams are involved as well as global sustainability teams is certainly important. So moving on to steps 4 and 5, the gap analysis assessment and defining a disclosure implementation roadmap. What we have here is a very overly simplified screenshot of Agendi's gap analysis assessment tool. And as I said earlier, essentially what we recommend to do is take all of the regulations that your company comes under in terms of any of the longer term ESG rating systems or voluntary disclosures that are important to your business, and itemize and break those down into the core granular disclosure recommendations and actions. And typically what we recommend to do is not just to look at an overall maturity score, but to understand how are you progressing in terms of your data maturity in-house? Are you even collecting that data? Do you have confidence in that data you're collecting? And then of course, thinking about how you're managing that particular item. Do you have policies in place? Do you have overarching goals? What kind of actions are you taking? And then, of course, looking at your current disclosure status. Are you already progressed to an advanced level in terms of public disclosures across your various annual reports or voluntary disclosures? And then overall, that can give you an idea of where you are at in terms of whether or not that item is a mandatory disclosure element. And as I said earlier on, what links in terms of defining that time horizon of what you should disclose and when, and the implementation supporting activities that go along with that item really comes down to your level of ambition. Now, of course, there's the minimum compliance activities, but if you think about the areas that come in on a comply or explain basis, that definitely needs to be a case-by-case judgment, looking at your organization and looking at those risks of disclosure, how progressed you are in terms of accurately disclosing on that information, and then building out that roadmap over time. What we always recommend is to make sure that you have a short, medium, long-term roadmap, and this end resultant roadmap can be shared across the key teams to make sure that everyone is essentially on the same page, understanding what needs to be collected and when, and which items are prioritized. And so moving on to the role of technology, it's always a tricky one. I come with a background in IT, so I always love this joint lens of looking at climate sustainability solutions with a technology focus. Within Agendi, we're often asked, what is the best platform for my business? Where should I go? Of course, we know the future is definitely technology, but the technology that is best for your business is, of course, the one that has full integration with your existing systems. Some of the other key considerations to think of outside of the integration capabilities is the particular platform or disclosure or tool in terms of their commitment to upcoming regulations updates. Is that rolled out on a automatic basis, or is it a more manual, bespoke element that needs to be adjusted? Data security and privacy. Many of our clients, of course, that comes under one of their key considerations, but historically, sustainability data was not seen as the same level of data security as it is today. When we look at some of the sustainability data points that we gather towards an organization, there is definitely very sensitive data that is collected in that area. And so making sure that not only we're looking at quality and the rigor of collection of that data, but also the long-term storage to make sure that any tool platform can meet those requirements. Of course, cost is going to come into it, and then any customization. So as I said earlier, we support many clients that are coming under many different areas of regulation. So making sure that that tool or platform solution can support that different rollout of all of the jurisdictions that you come under is definitely crucial. Brilliant. So coming back to the 6 key steps. As I said, all of this put together, one of the key area is to understand where you are now and where you need to get to, and building out that disclosure roadmap and understanding what are the key metrics you need to collect. Because of course, if you're not collecting a metric that you need to disclose on, it's going to put you in a bit of a challenge down the line. And of course, looking at all of this, it is going to evolve. So thinking about monitoring the progress, adapting as regulation changes, and seeing how that progresses across the future. I'll hand back to Victoria now.
Perfect. Thank you, Helena. And that brings us already to our key takeaways and our company checklist for sustainability disclosure. So a few things that we want you to take away is, of course, what or how the future of the UK sustainability disclosure looks like with the UK's endorsement of ISSB in Q1 2025. That will help standardize the sustainability disclosures in general. How to prepare for those, of course, as mentioned before, like early preparation definitely helps companies for a smooth transition for when the standard becomes mandatory. Also leverage your voluntary disclosures you're already preparing. And also, of course, the existing mandatory disclosures you adhere to so far. Then build out a clear disclosure roadmap that Helena went into a lot of detail earlier. So develop a clear roadmap for your company to understand, of course, the frameworks you have to adhere to, the regulation you have to adhere to, but also already prepare for ISSB requirements. We have a little checklist here in the bottom as well for your company. So mentioning, of course, again, the regulations, gap analysis here, the materiality assessment, of course, understanding what type of materiality assessment is most applicable for your companies and the regulations you have to adhere to. One point we see more and more important is to ensure that you have cross-functional teams on sustainability strategy. So not only including a sustainability, but all sustainability team, but also key functions like, for example, finance and risk teams. Use voluntary reporting as a means to prepare, mentioned that already a few times today. And then continual improvement to sustainability data in stakeholder engagement. We see data as a recurring topic, of course, especially with the increasing requirements on what data to report to. So have to understand, of course, what is the best way for your company to ensure that the data makes sense, that you have data governance in place, consider technology to potentially simplify the collection, storage, and governance process of your sustainability data in general. Yes, and this concludes our webinar, our part 1 of the 3-part series. We have included here again, and we will send that out, of course, our services. So basically everything that we mentioned today, we as Agendi already also can help preparing. So feel free to reach out, of course, if you have any questions afterwards. And we have a few minutes left now as well to answer some questions, and we are happy to stay in touch. Feel free to reach out to Helena or me directly, or to the london@agendi.co email address. Also happy to answer any questions via email.